about the all four cases. Now let's move towards the case number 5. For that, you can see the question on your screen. So I've written the questions here, case 5 and case 6, right? Very first, let's talk about case 5, problem number 11. Arav and Vikram are partners in a firm sharing profits in the ratio of 3:2. That is the old ratio. On 1st April 2020, their capitals are rupees 4 lakh and rupees 3 lakh respectively. On that date, they admitted Puneet as a new partner for 1/3 share in the future profits, right? Puneet brought in rupees 4 lakh as his capital, okay? 4 lakh as his capital. Goodwill of the firm is valued at rupees 3 lakh, okay? This is the firm's goodwill. Pass journal entries in the following cases. Case A, if Puneet is unable to bring his entire share of goodwill. Case B, if Puneet brings in only 10% of his share of goodwill. Listen, these two cases are belonging to our case 5. Right, in case 5 there are two possibilities. One, when the new partner is unable to bring the entire share of his goodwill, or he brings some part and some part he is unable to bring. Right, so two of the possibilities are here. So let's start. Very first we'll pass the entry for bringing the capital. Okay, and this entry for bringing the capital will be common in two of the cases. Okay, so I'll just write down here. See, cash account debit to Puneet's capital account 4 lakh. Whenever it is not mentioned here, whether it is in cash or in bank or through any other mode, then by default we will consider it by cash. Understood? Okay. Now let's move on. Case A, when he is unable to bring entire share of goodwill. So very first we'll have to calculate his share of goodwill. Okay. So that is the total value of the firm's goodwill. Now we'll calculate new partner share in that, and for how much share he has come into partnership, 1/3. So we calculate 1/3 of that, so that comes out 1 lakh. Okay, so new partner Puneet is supposed to bring rupees 1 lakh as his share of goodwill, right? But he has not brought it. Okay, however he is supposed to bring it, but he has not brought it. So what the sacrificing partners will do, because they are sacrificing their share. Okay, already I have told you. So they will debit his capital or current account. But at this place, debiting his current account is appropriate. Why? Because that will be specifically mentioned that that is there only for goodwill. Okay? So let's do that. See, Puneet's current account debit 1 lakh rupees to Arav's capital to Vikram's capital. Now we need to calculate the sacrificing ratio of these two, but we know very well, I have already told you in the previous video that when there is no clarification about it, only the share of new partner is given, then the old partner is the sacrificing ratio, then the old ratio is the sacrificing ratio as well, right? So it will come in the same way. You can calculate as well. There is no problem in that. Okay, but I am just directly calculating it. So 3/2, 60,000 will go to Arav, and rest 40,000 will go to Vikram. Okay. Now their capital accounts are credited with this amount. Why? Okay, because they are being compensated for sacrificing their share. Being share of goodwill was compensated to sacrificing partners. Right. In case A, we'll pass only one entry. See, this entry is common in case A and case B. Okay, so if you individually see the case A, then we have two entry, one this and another this. Understood? Now let's talk about the case B. In case B, we'll have two entries. Okay. See, case B says that if Puneet brings in only 10% of share of goodwill, and share of goodwill is 1 lakh, and what is the 10% of 1 lakh? That is the 10,000. Okay, so he brings only 10,000 and he does not bring the 90,000. So this amount is brought and this is not brought. Got it? Okay, so for that we'll do the entry very first. Cash account debit to premium for goodwill account, being share of goodwill brought in cash, right? Now for 90,000 we'll pass the similar entry as we pass in case A. Okay, but the amount will be different. Understood the point? Okay, so this 90,000 will go to Arav's and Vikram's capital account as 54,000 and 36,000 in sacrificing ratio. Now For this, because this is the premium for goodwill, this has to be adjusted. So we'll pass another entry. So this will be the entry for adjustment, adjusting this amount. Okay, that we already do. Okay, premium for goodwill account debit to RS capital to Vikram's capital. Now you must be wondering, I told you that only 2 entries will be passed, but I have passed the 3 entries. Actually, what happens? You can combine these 2 entries. Okay, you see that on credit side, the similar terms are there. RS capital and Vikram's capital. Okay, so we can debit 2 items here. One Puneet's current account, another premium for goodwill account, and we can credit RF and Vikram's capital account with the total. Okay, how? I just showed you. Okay, now you see the compound entry, and that is done. Why I passed it? Because if I had done it directly, you may not have understood that. Okay, but now you can easily understand, right? 54,000 plus 6,000, 60,000, and 36,000 plus 4,000 is 40,000. Okay, we can write the narration as well. Being share of goodwill partly brought and partly not brought, adjusted. Okay, so this will be done in case B. You can see, have a look. This entry will be common, already I have told you, and these 2 entries will be done. Okay, so it was all about the problem 11, case number 5. Now let's talk about the case 6. Case 6 means when already amount of goodwill appears in the books. Okay, so what treatment we do with that? Apart from all these 5 cases, one more entry will be added, that is related to the existing goodwill. How it is done? Let's have a look. You can go back to the video to see the question, because 2 of the questions are there on the previous slide. Okay, I have written the question here, so I just read it out. Arav and Vikram are partners in a firm sharing profit in the ratio of 4:3. On 1st April 2020, they admitted Puneet as a new partner for 1/3 share in future profit. Puneet brought in rupees 2 lakh as his capital, right? Okay, so very first we can pass the entry of the capital, there is no problem. And rupees 42,000 for a share of goodwill. Okay, no problem. On Puneet's admission, goodwill appeared in the books of the firm at rupees 56,000. Pass the eligible entries on Puneet's admission. So remember, out of these 3 entries, we'll pass this entry first, because very first what happens, the existing amount of goodwill is withdrawn by the old partners, and all old partners. It's not like only sacrificing partners, because on this goodwill, all the old partners are having the rights, but here are only 2 partners, so let's pass the entry. So this will be the entry, RS capital account debit, Vikram's capital account debit to goodwill, being existing goodwill transferred to old partners capital account. Now, in what ratio? In old ratio. What is the old ratio? 4:3. So let's divide that. 56,000, 4 by 7. 32,000 for RF, 24,000 for Vikram. Okay, right. So this will be the entry for transferring the amount of already existing goodwill. Okay, now this question has become similar for us. We need to just pass the entry. Let's pass the entry of bringing the capital. How much amount of capital is brought? 2 lakh. Okay. Now we can pass the compound entry. 2 lakh he has brought for capital and 42,000 he has brought for goodwill. Okay, so 2 lakh 42,000. Fine. So this is the compound entry for bringing the capital as well as the share of goodwill. Cash account debit 2 lakh 42,000. To police capital account 2 lakh. To premium for goodwill 42,000. Right? Being capital and share of goodwill brought in cash by new partner. Now this amount will be adjusted in the accounts of sacrificing partners. How? I will show you. Okay, premium for goodwill account debit 42,000 to RS capital to Vikram's capital, being share of goodwill adjusted, right? So this amount will be divided between these 2 in sacrificing ratio. But like I told you that there is no further clarification given. 1/3 will be minus, and then out of the 2/3, the same ratio is going to come 4:3. So we will directly divide the 42,000 in 4:3. 24,000 for RF, 18,000 for Vikram. So premium for goodwill account debit 42,000 to RS capital, 24,000 to Vikram's capital, 18,000, being share of goodwill adjusted. Okay, so this is how the adjustment has to be done. Only this thing is new here. Okay, there is nothing else new. Fine. So it is all about the 6 cases of treatment of goodwill on admission of a new partner into partnership, right? Very soon I will be meeting you in the another video in which we will be discussing the treatment of hidden goodwill, right? Till then, bye bye, thank you.